The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. The sky is falling. We'll see if that's a hollow threat or what. This is some carnage here, obviously. Let's just kind of walk through the S&Ps first. I was looking at some things in Asia, just continuing to look at them. The Nikkei futures. Some guys stayed up late last night, talked to some guys in Hong Kong, and stepping out of the way was the word. Here's the S&Ps. We talked, first of all, 2085.50 was the big number. We closed below. And we talked about needing to see that momentum below that area, and now we crossed the 2060. So again, the bounce situation, you've passed a couple of levels here. Here's the 240, nothing to hang on to yet. And again, there's been a mass exodus. I don't have to tell you guys that, but as we look at, as we look at the breadth situation, tried to pay attention to this intraday. These moves are so violent and extended right now. In my opinion, you've got to pay attention to those major inflection point levels, but you're also, trying to make sure you're getting some information from the internals themselves. So let me go into the indices here. And as you can see, Nifty 50 still kind of hanging in there on the weekly, but across the board, this is the globe right now relative to profiles. So it's pretty significant. And, the weeklies had kind of flipped over the dailies, the 240s to 60s, obviously, and we don't have anything to hang on to down here, and we're pretty much negative across the board. We talked about passing the 60 level and especially getting a close below there on a daily, but especially on a weekly would be very, very technically damaging for the S&Ps in general. So what do you do now? So here's the situation on the weekly. I'm going to pull up our breadth charts. We had talked about this thing looking a little bit, sideways at best, but starting to kind of gain some strength, actually, as far as the internals the other day. But that was predicated on we need to see what's going to happen around 2085.50 and especially 2060. So now on a long-term basis, we seem like this is in concert. Here's our daily breadth. We're very extended now on the short side. So again, if I'm looking at the S&Ps, I want to go into the scanner itself, and I want to go into my futures section, and I want to make sure that I'm paying attention to this area right now. Now you'll see a yellow peel back here. The scanner actually acts a little bit pre-charts a lot of times. So you'll see a yellow peel back here on 240, but you don't see any new locked-in level yet. So this is a sign right now that we may be reaching a little bit of a bottom on an intermediate or on a 240-minute basis. So as you can see, the chart's not showing this yet. The scanner's kind of forecasting that a little bit. We may see a new balanced area happen down here, and then you'll have some inflection points to pay attention to, and those will be emitted in the scanner. But right now, again, on a long-term basis, we've broken down. We could have some short-term bounces here, but let's wait until we see some locked-in levels here, if you will. Now, what does this all mean coming from all angles of the earth? I just want to kind of review some of the indices and how they're reacting globally right now. We talked about 35.54 on the Shanghai, and this is kind of Custer's last stance for this thing. We could see significantly lower numbers. I'm going to call this right now in the noise range for the Shanghai. We're sitting at this bottom of the box on a weekly. Here's the daily situation. Lows recently on the Shanghai were 33.73. We're going to have to pay attention to that level. It may pierce that just to do it. Here's the short term on the Shanghai, the 240 minute. There we go. Let's take a look at the Nikkei really quick. This is our Nikkei futures here. Not a lot of good news here either, folks. 19,798 was, the big level we had to kind of stay above. Any weekly closes below here, you're going to have to look at that area as resistance, as you will have to now look at on the S&Ps, by the way, this 2060 area, which is much higher as a big resistance level in the S&Ps. This is our weekly view. Remember, I mean, if we get a weekly close above 2060 today, I might eat my hat, but that would be a pretty vicious rally. So it seems like we're going to close on a Friday here below that level, and that'll be long-term resistance, as well as looking at some of the daily new profiles that may be appearing as shorter-term resistance. Now, as we look at those levels, we're going to have to, again, pay attention to what's going on with our breadth, which is at these odometers at the top. If these start getting positive around some of those levels, especially the daily and the weekly, we may have to look at passing on shorting some of those things, but we're going to have, or shorting some of those levels, but we're going to have to pay attention to it. All right, so let's keep looking around the globe for some usual suspect situations. Here's the dollar. Again, broke down below maximum support around that 96.10, 11, 96.19. Had to close below, and we're drifting lower now. So remember that close below yesterday is pretty significant. I was looking at that as an intermediate bounce point, but now we're sitting on the major area for the dollar, 95.30. We're trading 95.45 right now. We've reached a low already of 95.32. So we've met that. That's the last stop for longs. Anything below there, you're going to have to either change your tune or be out of this market and say uncle for a while on the long side. I've been talking about the dollar is still kind of in my opinion, a little bit of a, rally up churning state on the long term. This is the last time I'll be picking a long stance on the dollar, 95.30. Below there stops based on a noise level, and then we're going to have to wait and see if we can retrace back up there. And that remains to be seen right now. So this is kind of Custer's last stance on the dollar. The euro has really surpassed some areas that I thought it was going to level off on, at least 112.0708. We're past that area now. We talked about this. This was 112.0708, and then the next stop up 114.67. So what does that mean? That means that if you pick the battle on the short side, like I did, around 112.0708, you got a little bit more pain than I would want to suffer through on a stop level, and you're either going to have to get below that 112.0708 to start looking at this from the short side, or rally up into that 114.67 to try this again. All right, here's the daily. That's kind of, again, a little bit conflicting, so we're going to have to wait to get to those major inflection points to try this trade on the short side again on the euro. All right, let's take a look at the Japanese yen. Is actually, my favorite trade is kind of now coming back down below 123.68. That was kind of the stop area for me. We closed below there yesterday. All bets are off on the long side right now in the yen. This has been a great run. We've been buying support and getting stopped out periodically on this since 101. That was about 2,500 pips ago, but you have to take a break from it every once in a while. This is kind of what's going on right now. You've got some lower levels to pick a battle to, 121.44. So you're going to have to either wait for 121.44 or get back above 123.68. You're kind of in no man's land here for day traders. It's a dream scenario on many different products globally. You've got a lot of volatility. You can set your stops. You can get some big risk reward scenarios in a market environment like this. Let me figure out how to get this off my screen. Okay. All right, here we go. Always remember to put your stops in on situations like this. It can get carried away. If you're thinking about shorting the S&Ps on rallies, it can continue to go north. Make sure you got a game plan in place when you're playing around with dynamite like this. Let's take a look at the DAX. No good news here either, folks. Talked about things on their lows go lower. Nothing down here to really grab onto. Here's the 240. Got a new box attempting to appear. We may see that in the scanner. We may see some new levels to play around with, but it's not happening right now. Let's go to our futures section here. Let's pull up the DAX. As you can see, there's that peel back, and there's that peel back on the S&Ps. These are signs that you may be wanting to take off some of the shorts right now. These are target-rich type situations that you need to be aware of on at least the not ultra short 60-minute, but the 240. And then if you start seeing these signs on the dailies, then you know that maybe this breakdown is going to take a break at bare minimum. Let's take a look at the treasuries. These are things to, this is the balancing act. We're looking at all these products right now, the main ones that we need to be aware of to try to look at what's going on in the globe and the relative product action to try to trade the S&Ps. 128.16, that's where we're at right now. 10-year, in my opinion, should have gone a little bit higher than this based on some of the action. Again, in concert with what we just said about the S&Ps, possibly reaching some targets now on the downside after we broke 2085.50, 2060. The notes and the bonds seem to be kind of stalling here, so be prepared for a little bit of a snapback now. I wouldn't be shorting in the hole so hard on the S&Ps right now. We may get a little bit of a rally for a better opportunity on the short side. Gold, again, I haven't been a big fan of going long this thing. This is just come a moonshot here. 1125 was last time we took a look at this on the short side, stops in force, and then we talked about targets above 1159.7, 1160. Now we've met those and backed off. We've reached we've reached 1167, and now we're trading 1155. So remember that 1160 area is going to be a little bit of a barrier now. I just as soon wait patiently on this one. There's that 1160, 61. There's 1168. This kind of hole in the marketplace. We talked about this price action just moving violently in this area, and that's what's happened. So we could move violently down. We could pierce that, but we're going to now have to see a daily close above there to make me feel like, and a weekly close above 1160 is going to be pretty serious for gold. Right now, again, I'm not opposed to taking a little bit of a short stance up here on gold, considering all the things we've said already with the market and the notes and the bonds sitting where they're at right now. That would be a trade where you'd have to keep stops in on the short side. This trade right here, the ruble trade, continues to go north against not all logic, but, in line with some of the things that are going on for this particular country. But, the dollar getting weaker and the ruble getting stronger. This is kind of interesting trade right now. We could see another moonshot on the ruble. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Lots going on globally here. A little bit of a meltdown all over the globe. Everybody getting a little nervous. But this is kind of an arbitrage situation. I mean, for so long, I'd sit there and listen to all this news, and the S&Ps were sitting seemingly on the launching pad all the time. And now it seems like they're coming. All the situations are coming home to roost, and this thing's kind of arbitraging itself down to where it possibly should have been. But remember, folks, this is not a big pullback at this point on the grand scheme of things. It's, we could go much lower. We could rally back, be prepared for, what's going on here with, in this volatility. You're going to have to, if you take large positions, you're going to, be taking on a huge amount of risk. And if you're thinking about backing up the truck on the long side, I think you've got better days that you can wait on as far as, new information that's going to hopefully be appearing on some of the profiles that we look at. Right now, again, people, I love that saying, at some point you're always going to be right. When there's blood in the streets, that's when you're supposed to buy. I mean, if you took that attitude in 2008, there was blood in the streets every month. So at some point, yeah, but, do you have enough capital and enough whatever else kahunas to do that game over and over again? There's not blood in the streets right now. I mean, this is really nothing on the grand scheme of things. So, it's sit tight if you're thinking about backing up the truck on the long side. We could go lower here. And technically, this is the first hint. There's a lot of guys on TV right now talking about the death cross and blah, blah, and all that kind of stuff. And, this is the first week we've really had a decent pullback here. And what usually happens is when you have a move down, you need to kind of watch the next couple of weeks, see if we kind of consolidate here, that's actually a lot of times a continuation pattern, especially if we stay below profile. So it's not the buy the dipper thing yet. I don't think. If we've kind of surpassed some of the stop areas, and just word to the wise, we can go lower. Let's take a look at November soybeans. All right, so we talked about 910 being 910.5. That weekly unfair low being a big number. A weekly close below there is going to be pretty not good for longs. Here's the situation. We've got a new box attempting to appear on soybeans. And yesterday, in fact, we rallied back up almost. What did we hit? 910, 909 yesterday as we had rallied up and backed off of there. So we rallied back up into that weekly unfair low, and we're kind of drifting down. I'm not a big fan of going long this. I know there's other ideas about, November beans and December wheat. I want to pull up some wheat in a second. And the dollar coming off, is a repricing mechanism, as you know, for commodities. In crappier dollars, they need to reprice themselves in general. And, we're down 6 cents a bushel on beans. And, we theoretically should be up if the dollar's getting hit a little bit here. So here's the December wheat situation. Again, I don't like how this thing from the long side, I don't like how it's, just kind of consolidating down here and not actually done a flush below recent lows here and getting into the $4 range and just squeezing some people out. Remember, these violent moves down or up are usually a lot of times the ending of a, of a long-term, move down or up. And we haven't had that big time flush yet. And I think as soon as that happens, we will start taking a look at this from the long side. It's a lot of fundamentals against being long right now, this particular sector. And I'm just going to stick with that and, look at scooping this up at some cheaper prices is my opinion. My opinion is not always right, but again, we've got some inflection points we can pay attention to on that type of attitude. Here's crude oil. The XLE caved in tremendously, which is kind of what I was looking at. Let's look at the XLE quickly first. And man, I was looking at this as up here the other day. We talked about, keeping your stops in force. We've actually surpassed the daily unfair lows now and the weekly unfair lows. And here it is. This just happened in a blip all of a sudden. Didn't take a lot of time for that to happen. And now the XLE is not holding up in there. I'm still looking at crude oil, trying to nibble some above 41.75. And we're going to continue to look at the XLE. We'll talk about this a little bit further when we come back after this break, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and just want to revisit crude oil really quick. This has been, if you watch this show, we've been bearish crude oil since around 100, and there's been many reasons to take that attitude. This is our weekly view. We've had some areas on the daily where we're, back in March, we were able to pick a couple little battles on the north side, but then had to change our tune again, and that's basically what I want to make the point on, is changing our tune. As traders, we try to find areas to try to pick battles. And recently, around this 41 general area, we started looking at the XLE. If you haven't watched this show lately, you know that I've been looking at the XLE, and as a turnaround situation that started happening in March, if you go back into there, we kind of started seeing some green shoots on some oil-related stocks, and that was kind of a leader and a relative strength, higher lows on the XLE relative to lower lows on crude oil. We had that kind of situation starting to happen again. And as a trader, we're looking for those signs and opportunities, and the dollar situation was causing me to lean that way a little bit too, to try to start thinking, okay, well, let's, we've come off significantly. Last time we tried to pick battles on crude oil, and I'm going to pull up crude oil again. Just a little bit of a small education here. Last time we started trying to pick those battles on crude oil back in March, crude oil was trading above $50, and we are 20% lower, and we were just taking a look at maybe there's some green shoots here showing 41.75, had a new profile appear. And again, this is a harmless type of stop out on a grand scale. Your risk reward scenarios on trades like this, we looked at this was going to be a 6 or 7% move, and possibly even higher, to take a look at a good, let's just say risk a percent or two to make 6 or 7. And that's what, trading 101, you want to, again, try to line up those odds in your favor. This is about putting the odds in your favor, not rolling the dice and seeing what happens, but trying to wait patiently until these type of signs line up. And, hey, you know what? This one, no harm done. Taking losses is a part of trading. And right now we have to patiently wait. Doesn't look as good as it did on crude oil for me on the kind of all things considered bandwagon, but getting above 41.75, maybe a chance to start nibbling on this, and a close above 41.75, I would use that as a fence, and that's the way I'm looking at it right now. So I think we've covered all the things we wanted to on a usual suspect list. Let's take a look at a couple of stocks that are just flying around. John Deere earnings related situation or guidance. I think we're trading 86.50 pre-market. So the telltale signs on this, and you look at the scanner and you look at stocks trying to find weak things that are trading below profiles on the daily and the weekly. 91.94 trading below on the weekly, and 91.30. So we kind of had that throw up move yesterday. That was ahead of earnings. I'm not a big fan of trading ahead of earnings, but now we're down 4 or 5 points in the morning on John Deere. Not a lot of mystery there, multinational type situation. We're going to take a look at GoPro really quick. I'm just pulling these off of some instruments that are gapping up, gapping down this morning. GoPro. So here we go. No pun intended. 52.62 weekly unfair lows. That's where we broke yesterday. And again, technical damage is the theme here. And this morning we're trading 48.20, so we're down a couple more points on GoPro. What do you do with this now? Again, I think you got to sit tight, get out of this stock if you've been long, and you got some pretty clear-cut signs that the bounce that happened back in March, we're kind of having some technical damage right now. Getting back above 52.62 would make me feel better about being long this particular stock. Let's take a look at Netflix. It's right in the den. Get him up. Anyway, 106.57. So, we finally had the technical damage, and this is what we talked about yesterday. In fact, we talked about getting below, to short this, getting below 119.73. That was going to be the name of the game. That was the technical damage we were looking for. An intraday that started happening, and then it just snowballed. And guess what? This morning we are at 106.70. Ouch. So long-term support's at 189 for guys who are trying to pick up Netflix that missed the ride before. Now I think you can wait 189, or at least start having some green shoots here on the 240s. And right now we're trading 106. Yesterday, again, we closed at 112, and at this before on the close on Wednesday, we were at 120, 121 and some change, 122. So let's do the math there. 14, 15, 16. About a 15% move in 24 hours, would you say? Yeah. 36 hours. So that's a pretty good pullback on Netflix. But remember, the maximum support on this is 189. And you could at least wait for some new profiles to appear here on the daily. And you'll get those. Let me just type in Netflix here. See, there's the 189. There's the breakdown we had yesterday, and there's not a lot of green shoots here. So, again, I think this is a waiting game on Netflix right now. And if you guys caught a short on Netflix yesterday, getting below 119.73, I commend you on that. We talked about some of these high flyers. You just have to wait patiently until, trying to be the hero and pick the tops. I mean, that's just a very low percentage game. And having some technical damage, we talked about getting below 119.73. This is just case in point for a high flyer and getting the confirmation that you needed, instead of trying to short this thing up in the balanced area as the market was looking a little shaky. This thing, anything could happen. It could have gone straight up even on a day like yesterday. So let's take a look at Facebook. I don't even know what ketamine is. It's a club drug. I guess I should know what that is. Medications managed. Gotcha. Is that the thing Michael Jackson died from? I can't. Anyway, we're going to take a look at SUNNE. Oh, excuse me, Facebook. I'm sorry. Jesus. There we go. Here's a long-term on Facebook. Pre-market, we're trading 87.90. All right. So what's happening now is we're pre-market breaking down below 89.50, which is intermediate support on this. Now, when you look at a stock like Facebook and you're trying to stay with the long-term trend, I look at these, and again, let me go back to the weekly for a second. Here's the weekly. We had, and again, this is another good example of, when these orange bars start to appear on the long term, and here's the scanner. These, in fact, I'm going to go here to this, and I'm going to use the help function here. Light green to dark green cells with yellow on the right indicates that pricing is above the top of the current profile value zone, yet a new profile is attempting to appear. Right? That's a target sign at bare minimum. It doesn't mean it's a get on the short bandwagon sign. So when we had that happening on Facebook, and you can set that to scan in the scanner. I'm going to pull this. What the heck? All right, so I'm going to go in here and I'm going to say, what is showing new boxes on the weekly? All right, so what that's doing is telling me quickly what stocks may have met their targets on the upside. Priceline, Reynolds American, Teco Energy, VeriSign. These are long-term. We may be stalling target type situations. Now on the downside, Biogen, Discover Financial Services, Denbury Resources. These are all cool things to know, as it was very cool to know Facebook. When that orange bar appeared, we got the new profile appearing immediately on the following week. And now we've got a new balanced area, and that's kind of, hey, you might want to take some points off the table here when those signs start happening. Now, as of this morning, you've got a little bit of technical damage going around 87. So I was going to say, I like to look at, when we're in a pretty strong uptrend, and let's just say, we're going to go all the way back down into 81.31. That, would be a support area for this stock on the long term. And I know guys who are in this thing a little bit higher probably don't want to hear that. And we do not have to travel the entire fair auction. But remember, when we get a super wide, there's a lot of things to read into this right now. When we get a super wide profile, and I'm going to go back to the scanner, and I'm going to type in Facebook. There it is. That's a wide profile. All right, see that? That's basically saying we're going to have some kind of extreme volatility, but you knew that this was a wide profile the minute it popped up here. So, again, that's predicting extreme volatility on a relative scale. And, what do you do with this now? As we're trading below this 89.50, if I'm going to try to get long this thing again and try to catch this thing, maybe pick up some points I didn't pick up on the upside, I'm going to have to wait until we get above 89.50, or I'm going to have to wait until we get down to 81.31. And that's just the black and white way of looking at this. Can we do a Netflix here? And now that we've broken down below some of these daily unfair low levels, continue to head south? And is that technically damaging? Yes. Your targets down below would be 81.31 on that type of trade. I'm going to take a look at SUNE. That was something else that somebody asked me to look at in here. We'll look at PHI. What else? Does ketamine have a symbol? Just kidding. Let's take a look at SUNE. This is a $12 stock, trading 11.66 pre-market. Ouch. Okay, so, well, the technical damage, I don't want to be a Monday morning quarterback, but 26 was kind of the Custer's last stance on this one for a while. And is it time to pick it up on sale? Is that kind of what we're asking here? I don't think so. I think you got much better long opportunities. I'm a big fan of buying stocks that are holding up and selling stocks that are not holding up. And if you're asking, is this still a short? I think you can. I think stops above 13 on a short-term basis are in order on this one. And if we rally back into 1774, I think you've got an awesome short opportunity. Yeah, I mean, yeah, the answer is yes. I think you could just put some stops in above 13. That's funny. That is funny. Let's take a look at PHI. Jay, I'll be using that for a while. Let's take a look at PHI. So again, technical damage below 61.64. And you can look at if you didn't have the profiles on here and you're looking at chart action, this is pretty evident that we, kind of had a throw up move below all these consolidation areas, triple bottoms, quadruple bottoms, however you want to call it. I'm not a big fan of buying those. I think they're meant to be pierced. But here's the situation on PHI. Let me see where we're at pre-market here. 58.06. The question on this one, what's the main question on this one is, what is my outlook on this? Just as far as looking at the simple indicators that I've got up right now. I've talked religiously about not being happy about buying stocks in general. I've constantly said for the most part that I thought the market was trending sideways at best. I think everybody should have been prepared for some kind of sell-off. And I was always, if you watch this show a lot, I've always had the scanner up and I've always been preaching, what's the stocks that are showing their hand early. And here's the below the box scene. And we got a sea of red, just incredible amounts of stocks that are trading below profiles now. 319 stocks out of the S&P are trading below profiles, 124 in the middle in the balanced areas, and only 51 are trading above profiles. Now, we can find out what that is really quick. Here's the daily, here's the 4-hour, here's the weekly. All these numbers are right here for you to see. These are statistics I think you should be aware of, and you're not going to really get anywhere else for that matter. But as we look at this, the Apples of the world have broken. There's a lot of weak stocks that you can sell. And there has been a lot of weak stocks that you can sell. And I know you guys got bored of and probably tired of hearing a broken record. The same stocks that I've been talking about, the Whole Foods markets, the Walmarts, the T. Rowe Prices of the world, the Avon, these, I pull them up every day and I'm like, you know what? You can get the excitement if you want to. You're usually going to pay for it. But the boring trades have been to find the weak stocks and to just sell them, right? You might not get as many points as a turnaround at like Netflix, but again, that's the relative strength trading game. Find the tide of the marketplace, do your filters to find the weak or strong stocks, and then use the inflection points. And that's the premise of that scanner. So we're gonna be right back. I'm gonna talk about PHI a little bit more, and then we're gonna look at another stock that somebody's asked me about. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Let me finish up with, was it PHI, just really quick. Was it PHI? Pretty sure it was. What do you do with this now? Again, I'm not a big fan of stepping in and buying stocks in a large way, especially stocks that are down. I mean, I think you've got better opportunities to buy. So I'm not looking at this as an opportunity. You got 57.66 as kind of a fence to lean on this morning. You can put stops around it, and that's, if you're going to put a gun in my head and force me to buy it, that's my plan on it. Let's take a look at the S&Ps. Let's take a look at our scanner really quick, and let's just look at the 60-minute. Now, you know, what the drill is here is, you know, we had that crossover on the morning of the 19th, all right, and that was on the opening. And again, this crossover system on breadth being net positive or net negative is a system in itself on the 60 minutes. And as you can see, we have really not, you know, it's been great because, you know, as we cross these borders of 85.50, which made me feel a hell of a lot better about shorting the S&Ps, using 60 as a little bit of a target. 75 was in there, but 60 is the big number. And getting that close below 60, we're more than likely going to have a weekly close below 60. But, you know, do you short this thing this morning? We've come down quite a bit, folks. Here's the daily situation on the same type chart scenario. Breadth negative across the board, and I understand that. But, you know, do you step in pre-market and short this thing? In my opinion, the answer to that is no. All right, you want to wait until we have some new information to appear. I mean, you know, yesterday morning, case in point, what do? We rallied back up to, what was it, 2060. Well, I could find out real quick if I paid attention to my chart. What did we do here? I'm sorry, guys, I can't remember. Was it 2065? Is that where we kind of rallied up into after being down pre-market? I mean, we could, we've had some volatility this morning. There's no question about it. But right now, we don't have anything to hang on to here. Here's the short-term 60-minute views. We've got 2010-78 sitting down here. We've got 2020-90. So let's just call it 2011 and 2021, right? We have had some green shoots breaking stride here on the 60-minute. If you look back in time, since 2100 on a 60-minute, breadth has stayed negative as we crossed that 2085. And then we have had no breakage of profiles until recently. And that was, late last night. So, we're coming back down below. I'd prefer, if you're going to be long, getting back above 2021, putting stops below 2021, or 2011 is a focal point. Everything in between is no man's land to me. And if you are going to short this, stops above 2021 and breakdowns below 2010. But do you short it pre-market? There might be a little bit of an overreaction in the interim. I think the long-term trend obviously is kind of changing, but right now pre-market trading all over the board. The stocks haven't opened. Remember that. These are the arbitrage opportunities. A lot of these stocks do not have fair prices. I mean, I'm going to kind of reset my settings here. Remember that 9:30, 9:45, all these stocks open, and then you've got a true where the market is relative to the internals and the futures. So I think this is kind of a wait and see. All right. That's my take on the S&Ps. Guys, keep your stops in today. We could have a little bit of a snapback move, but remember those inflection points on the short term. And in the scanner, we do not have any longer term levels to pay attention to yet. Stay tuned for Larry. Have a good trading day and have a good weekend, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.